Hey traders, today is Wednesday, January 7th, and I'm Michael Boutros, Senior Market Analyst with StoneX, here for a quick multi-time frame look at the dollar yen. Early in the year, this thing saw a 12.9% rally off the yearly low, and despite a 12% range for the year, dollar yen only closed down 0.33% for 2025. We open up the year just below resistance. 157.70 is the 2025 high week close that was registered in January of last year. We ran into that back in November, again last month, and that's where we find ourselves into the open of 2026. Now we have some major event risk on tap with the ADP employment report. Will be out probably by the time this is published, but the real heavy hitter is going to be Friday's non-farm payroll report. The weekly opening range is preserved right below resistance, and we're looking for the breakout in the days ahead. So 57.70, that high week close, is nominal resistance at this point, converges on the median line. We're looking for a reaction there. Initial weekly support doesn't really come until 155. The 2024 November high close has been a decent pivot in price, and it sits right on the 155 psychological barrier. So that's going to be near-term support. Bullish invalidation for the broader advance that we saw from April is down at a basic 236, the shallowest of retracements, and that converges on the lower parallel near 53.65. We need a confirmed close above 57.70 to get the resumption trade. You still have to deal with last year's high at 58.88, but the levels are pretty clear. Here's what dollar yen looks like on the daily chart. On Monday, we did mark an outside reversal candle off of the 2025 yearly open. That was 57.18, and the entire weekly range is basically defined by that single candle. So just a real near-term look, we're waiting for a breakout of that single day range to give us guidance ahead, and again, some major event risk on tap over the next few days. Now, 155 into 155.35 is where we're highlighting support. That's going to be the December low day close. The day the low is registered in December, the close of that session. And again, 155, we just talked about the November high close from 2024. Both of those levels converge on the 25% parallel, okay? And that's going to be nominal support on the daily chart. Initial resistance, 57.18. And again, we need to close above 57.70 to get the resumption trade. Here's the 4-hour chart, drilling down even deeper. Here's our weekly opening range preserved right below last year's objective yearly open, and we're just straddling the 2026 open, which is right around 56.65. So if dollar yen is heading higher on this stretch, losses would need to be limited to 155. You need a confirmed close above 57.70. The November high comes in at 57.90, so keep that in mind. But that's the breakout that would unleash the next leg higher in dollar yen. Subsequent levels, you're looking at the 2025 high at 58.88 and the April 2024 high near 160.21. We've been in a multi-week, multi-month contraction with this consolidation formation right below those 2025 high day close. So ultimately, over the next few days, next few weeks, we are inevitably looking for a breakout of that range. If we buckle below 155 on a close basis, that does open up the potential of a larger correction, still within the broader uptrend, but downside levels in that scenario would be looking for the December low near 54.35, and again, that 236 of last year's rally, that converges on slope support. That would absolutely need to hold, or it would suggest that a larger trend reversal is underway, that a more significant high was registered back here in November. Keep in mind that key event risk into the close of the week. We're just in the early throes of the December opening range, so stay nimble. I'll try to keep you updated on X at MB Forex as always. Till then, best of luck trading. See you tomorrow.